Hello guys, hope you're doing great today. Welcome to this video on artificial intelligence and the stock market. If you're an investor, you're likely aware of the impact that wars and changes in interest rates can have on the stock market. As we've recently seen, rising interest rates can lead to market instability and even crashes. But what exactly is artificial intelligence and how can it be applied to the stock market? AI is a broad term that encompasses a range of technologies and techniques used to simulate human intelligence in machines. At its core, AI uses algorithms and statistical models to analyze data and make predictions about the future. In the context of the stock market, AI can be used to analyze vast amounts of data, from news articles to economic indicators, to identify trends and make predictions about market behavior. For example, an AI model might be trained to recognize patterns in stock prices and use those patterns to make predictions about future prices. This video will explore the potential of artificial intelligence in predicting the stock market during periods of high interest rates. We'll examine the challenges of predicting market trends as well as the potential benefits that AI could provide. It will especially test to see if AI could accurately provide us with a warning before of the current stock market and the current crash from the banks. As interest rates continue to rise, investors are paying close attention to the stock market. Interest rates affect the economy in a number of ways, from consumer borrowing to government spending and ultimately the value of stocks. The recent bond market downturn is a strong reminder of the impact that interest rates can have on the stock market. So the question is, can AI accurately predict what will happen to the stock market in the face of rising interest rates? Let's explore and see the possibilities and limitations of artificial intelligence predicting the stock market and consider how it could have potentially helped investors avoid losses to the recent market downturn. For this, I'll be using the ChatGPT free version that's currently available. This is from openAI and is free for everyone to use. This is the March 14 version. There is, however, a better version available called ChatGPT 4. As this version wouldn't be available before the crash, it will not be accurate to use this. So for this use case, I will stay with the free version that is currently available. So I'll be using this command. This command is as basic as possible. The reason that I'll be trying to make it as basic as possible because the info that would be available beforehand wouldn't be that specifically. So that's why I'll be using this. The current Fed fund rate is the interest rate that is used in America and has been speculated beforehand to end up higher than 5% to fight inflation. The ECB fund rate, on the other hand, which has been stated by the ECB to go higher than 3.5% at this time of year, so this could be easily guessed. So when we run the command, it spits out 5 different industries that are in risk for crashing. Here are the 5 different types of industries that ChatGPT thinks are at risk of crashing due to the ongoing interest rates and the war. First one listed is the energy price. As we all know, the oil prices and the gas prices have been steadily climbing since the war in Ukraine. This is due to the fact that Russia is a large distributor of each. However, the price has been steadily coming down. The second industry that is listed is the banking and financing sector. This is the main one that I wanted to see if ChatGPT could accurately guess. As of recently, Credit Suisse and Silicon Valley have crashed. However, ChatGPT lists this mainly due to the fact that it thinks the interest rate could decrease the demand for credit. This is, however, not the main reason banks are crashing nowadays. This is more to do with bonds of banks going down in value due to the higher interest rates. But however, it's impressive to see that ChatGPT could accurately guess the sector. The third sector that's listed is manufacturing. As it states, higher interest rates could decrease the cost of borrowing for manufacturers, reducing their profitability and affecting their ability to invest and expand. In my opinion, this one is very important, but this one will be something that will affect us slowly and not instantly. This could take a few years to work in. The fourth and fifth sector is hospitality and tourism and retail. These 3 sectors haven't been that heavily affected by the war and the higher interest rates. However, this can still happen. The thing, however, with ChatGPT is that we can also ask them what stocks or sectors will perform best during this time period. And when we do this, we also get 5 answers. As you can see here, the first sector that it says that perform best is finance. It believes that during high interest periods, banks can benefit from this and make more money. However, it doesn't include the fact that if interest rates go too high too fast, there is a chance of it crashing, as we see in Silicon Valley. Secondly listed is the energy sector. ChatGPT believes that the energy sector will perform better in high interest rates, and however, this has been earlier mentioned that it could be crashing due to the fact of the Russian war. So this has been contradicting with each other. The third sector is consumer staples. These companies offer stable earnings and may be less affected by interest rate fluctuation. And consumers tend to buy essential goods and services regardless of interest rates. One example of this sector is Unilever. As you can see, this sector has been doing quite well and hasn't been that heavily affected by interest rates. The same can be said about utilities. On the other hand, we have real estate. This can perform better when higher interest rates are applicable. This is due to the fact that when there are higher interest rates, less people will be buying a house and more people will be renting, therefore driving the rent prices up and therefore increasing the profits for homeowners. So as you can see, ChatGPT can predict some good things, but it has to be taken with a grain of salt and has to be taken with some more information and doing some more research. But it has made some accurate predictions and could have warned some people about like the banks and some crashes which could benefit some people. So anyways guys, I want to thank you for watching my video. I hope you enjoyed it, and if you have some comments or some suggestions, leave them in the comments. Thanks and have a nice day.